Hello traders, this is Rich from Tradesight. This is our market preview for the coming session. This is going to be for Friday, September 27th, 2013. Today's action was positive across the board. We're up on the ES, the NQs, and also the Dow. Internally, the market was also okay. Today, definitely, we saw some outperformance of the Nasdaq side of the market versus the broad market, for sure. So we're going to give today's overall rating for the price action of B-. Internally, the market was positive. We had positive advanced declines on both sides. The advanced declines on the Nasdaq side actually trailed the New York, even though the Nasdaq side outperformed the New York. So instead of giving a B rating to the internals, we're going to only give the internals a C+. So they're okay, but they weren't really good. If you're going to see the Nasdaq outperform, you prefer to see the internals and see see the internals a little bit better and see a little more broad-based support, which we did not see in today's session. So let's move on and take a look at the major averages. Let's start with the ES futures first. All right, so here's a look at the ES futures. A couple features here to take note of. We held above Wednesday's low, previous session. We did take out the high. We closed up on the session and also, importantly, closed above the day's open. So while we're still kind of gaming the 10 EMA here, we closed below it here the previous session, but we did not expand the range to the downside. So a break below the 10 EMA is not yet qualified. So while we do have a 13 exhaustion in place, that's not qualified yet because we don't have a break below the 10 EMA just yet that's meaningful. To the downside, we're going to have key support at the previous day's low. That's going to be your first support at about 1684.5. Then more important supports can be the 50 DMA at 1676.5. Key resistance is going to be obviously the breakdown gap here, the low of this candle here from last week at 1701, and then huge resistance at 1718 if we get there, because that's also the risk line. That's the magenta line that's kind of covered up here off of the secret exhaustion. So a couple features there to keep in mind for the ES. Nasdaq side of the market was definitely much stronger. You can see the Nasdaq side has not violated the 10 EMA on a closing basis yet, so we have a positive day today. We gapped up just a little bit, but we did close that gap, and we did close above the day's open. So we've got a nice white body candle on the chart to work with. A couple things to keep in mind here. The Murray math lines have spread out, so there's not really any resistance if we get a breakout here. The breakout level and key resistance near term is going to be 32, 39, 39, call it 32, 39, 30, 32, 40. Resistance if we break out of that is not going to come in until 32.81 which could be a nice push if the market can gear up on the bull side tomorrow. If we do falter tomorrow, and this proves to be just a little bit of a bounce, we're leaving all these candles to the downside. We're going to have key support at the 10 EMA at about 3200, 3201. And then if that breaks, then there's really no substantial support. You can see this vacuum here until we get to the 4/8 level at 3125. 3125 is going to be very strong support, especially since the 50 DMA is coming into play there. Looking at the bonds. Bonds took a little bit of a breather today as traders were putting a little more risk on today, especially on the Nasdaq side of the market. We're still positive across our smaller time frames. We're above the 50 and the 10 EMA. So for now, we're just taking a little bit of a break, and as long as we hold above these levels, that's fine in this chart. If we do break down back below the 50 and the 10 EMA, which are coincident right now, then we're going to go back to short-term positive. But for now, this chart remains a little bit at odds with the market trying to push higher while this one's still going up. If we do break out, especially on the Nasdaq side, be sure to watch the price action in the bonds to see if they're kind of giving you a tell that the broad market might want to go along with the Nasdaq side and also start to break out as well. I think the bonds will kind of be the arbiter in between the two. Internally we give the market a C+, only just because it really just wasn't wasn't performing all that well on the Nasdaq side. You can see the Nasdaq side here barely made a new high in this move. You can see that we were really just hugging this trend line here and haven't pushed out to a new high. The key thing to watch, though, is going to be the broad market side. We've got a potential higher low here versus the previous touch, but that yet has to really confirm itself, and you can't confirm a higher low until you get a higher high. So until we take out this trend line here on the cumulative advanced decline line chart, we don't have a confirmed breakout here, and we really need to see that happen. Granted, with the S&P being as sloppy as it has been the last few days, this has been actually a pretty good showing internally from the market, but a breakout would be a big deal and a notable technical development here in the cumulative advanced decline line on the New York Stock Exchange. Here's a look at our 10-day trend. Our 10-day trend is pretty neutral. We did hit this overbought threshold that kind of precipitated and set the table for that recent weakness that we have had in the market. But right now we're back to neutral. So right now we're neither overbought nor oversold, and have about a half a tank of gas to go either way, if you will. All right, here's a ratio chart of the S&P divided by the TLT. We still have this positive overall bias in place. We're still below the current regression channel, which is the real comfort area. So the market really needs to recoup this. We did have a little bit of weakness today in the bonds, but it really didn't affect the chart too much because we didn't really get too much of a positive performance out of the S&P. The real positive performance was in the NDX, which is obviously not reflected in this ratio. So if we can recoup this channel, get back into the comfort area, we can again perhaps develop some upward momentum in the overall broad market. All right, here's a look at our multi-sector daily chart. You can see that the XAU is still just being whipped. It's still a source of funds. The one takeaway today is that the BTK index was fairly positive, pretty strong day to the upside here, so that was a positive performance. The SOX, which is the blue line, were also kind of okay, and really kind of just trying to struggle through this previous resistance area. The banking index, though, is weaker and remains so. So we're seeing potential lower low setting up here in the BKX, which hasn't really qualified yet. So we'll take a look at that chart in a little bit. And lower low in the BKX is okay as long as some of the other important later cycle sectors start to pick up the slack. All right, so here's a look at our individual sectors. The individual sectors are the performance is kind of okay today. We had the BTK top gun by pretty good amount. We're up a full 2% there. The Interactive Week Internet Index was pretty strong too, so we're definitely seeing some risk on there. I think that's really because we had such a strong performance out of the Nasdaq, and that's definitely welcome to the broad market bulls. Looking at the bottom of the list, the gold and silver was the last lagger, which is fine. That can be a source of funds. The only cause for concern here is that the BKX was pretty weak. The OSX was also lower on the day, which is not great. We would like at this point like to see a little better performance out of that. But the one thing is the XOY, which reflects a little bit more of the larger, more integrated energy companies, wasn't as weak as the OSX. It actually was kind of just a middling performer. One little positive kind of buried within everything here is the transport average. Transport is one of the key late cycle performers. So you really need if you're going to see the BKX weak, you want to see the transport strong. And today the transports did actually outperform the broad market. It outperformed the Dow, was about even with the broad market. So that's definitely okay there. We prefer to see that just pick up just a little bit more, and we'd definitely like to see the energy names kick into gear just a little bit more. But with the Middle East news still in flux and kind of working off what were some elevated energy futures prices, that's okay for now. But we don't want to see this last, and want to see the energy names really start to kick in if we're going to see some strength in the overall market that's going to sustain itself. Just want to take a look at a couple of key sectors here. The BKX is still hanging on to key support here from the static trend line off of the this 1 through 9 setup phase. So this is okay, but we don't want to see this level lost. That would definitely be a real negative for the market if we start to lose this and really break down here without seeing some better action out of the transports. Transports today actually traded inside the previous day. So today's kind of a non-technical event, but it did hold its own. What we really want to see is we want to see this pivot higher and hold the 10 EMA. So far we're still holding the 10 EMA. So we're positive in the transports in all time frames. And here's the XOI. The XOI is still hanging out there pretty well, still positive in all time frames. It's above the 200, the 50, and the 10 period moving average. Key resistance in the trade 2 level is going to be this 8/8 level at 1437.5. Elsewhere, I want to take a quick look at the oil futures. Oil futures are really kind of hanging on to the very bottom of this trading range, which is fine. If we lose that, that's going to be a notable development. The only cause for concern here is we have done 9 bars down to the downside in the seeker setup phase, but haven't been able to pivot to the upside. As we talked about before, the news is definitely important, and for now, this is still negative, and the MACD has penetrated below the 0 line. We haven't really picked up a lot of steam to the downside, but if we do get a break, it could be fairly meaningful, because we do have a MACD that's below the 0 line, and we haven't made any hay off of the 1 through 9 setup phase, off the seeker count there. And finally, the gold futures today really just didn't do too much. We're still just kind of pinched here in the same area that we've been in, so nothing really new from there. MACD is still kind of sloppy. The CCI is okay with a little bit of an upward bias, but really just really a lack of momentum right now. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.